Hello everyone and welcome back to my new video. The world's most valuable car company is unique among its peers in that its stock trades at a considerable multiple to its earnings. Its price skyrocketed during the pandemic on the back of an investing frenzy by retail traders and the Biden administration's decision to make electric vehicles a centerpiece of its push to decarbonize the economy. Taking into account the latest decline in its value, Tesla stock has dropped by roughly 28% since the start of this year. One could argue that a correction is overdue for the company, and that this might be it. In keeping with Tesla's ability to provoke sharp opinions among supporters and detractors, analysts are divided over the importance of the recent earnings report. Tesla said Wednesday that its profit leapt more than sixfold last year to $5.5 billion, the highest total in its 19-year history, as sales soared further, especially in Europe and China. The world's most valuable car company is unique among its peers in that its stock trades at a considerable multiple to its earnings. Its price skyrocketed during the pandemic on the back of an investing frenzy by retail traders and the Biden administration's decision to make electric vehicles a centerpiece of its push to decarbonize the economy. Taking into account the latest decline in its value, Tesla stock has dropped by roughly 28% since the start of this year. One could argue that a correction is overdue for the company, and that this might be it. In keeping with Tesla's ability to provoke sharp opinions among supporters and detractors, analysts are divided over the importance of the recent earnings report. But the automaker warned that supply chain troubles stemming from the pandemic would again constrain production through this year. Our own factories have been running below capacity for several quarters as supply chain became the main limiting factor, which is likely to continue through 2022, the company said. Tesla's revenue rose to $53.8 billion in 2021, from $31.5 billion a year earlier. Deliveries increased 87% to 936,000 cars. It closed the year with a strong fourth quarter in which revenue climbed 65% to $17.7 billion, and net income rose to $2.3 billion, from $270 million in the comparable period in 2020. The company generated $4.6 billion in cash in the fourth quarter and ended the year with $17.5 billion in cash on hand. Elon Musk, Tesla's chief executive, said the company would not announce any expansion of its product lineup this year so it could focus on increasing production. Adding models while demand is outstripping supply wouldn't make sense, he said in a conference call with analysts. If we introduce new vehicles, our total output would decrease. Tesla said it was working on its Cybertruck pickup, which was supposed to go into production in 2021. The company repeated a previous forecast that it expected sales to grow about 50% a year on average for the next few years. Mr. Musk said Tesla would grow comfortably above that figure in 2022. Tesla grew last year despite a shortage of computer chips that affected the entire industry. The company was able to mitigate the impact of the shortage by switching to types of chips that were more readily available. Tesla can make such a change because its software allows its cars to work with a greater variety of chips than other automakers' vehicles do. The chip shortage is still an issue, Mr. Musk said Wednesday. We expect to be chip limited this year. It should alleviate next year. In addition to its established factories in Fremont, Calif, and Shanghai, Tesla needs output from plants it is building in Texas and Germany to maintain its rapid growth. We aim to increase our production as quickly as we can, not only through ramping production at new factories in Austin and Berlin, but also by maximizing output from our established factories in Fremont and Shanghai, the company said Wednesday. We believe competitiveness in the EV market will be determined by the ability to add capacity across the supply chain and ramp production. Mr. Musk said Tesla would probably start scouting locations for a new vehicle plant by the end of the year. The company said it hoped to begin shipping Model Y compacts made in Austin. Production at the plant near Berlin, which had been expected to start by the end of 2021, has been delayed because of disputes with German authorities over permits. Tesla dominates the market for electric vehicles in the United States, but it is likely to finally face some serious competition this year. Ford Motor, General Motors, Volkswagen and Hyundai have all outlined ambitious plans to introduce new electric cars in the United States. Two fledgling electric vehicle producers, Rivian and Lucid Motors, also have just started shipping vehicles intended to compete with Tesla. Part of the problem with assessing Tesla relates to constantly shifting release dates for the company's planned platter of consumer products and services. For example, Musk told analysts yesterday that the company was planning to focus on its existing slate of cars and not work on new models like the Cybertruck and the Semi. At the same time, he announced work on a humanoid semi-sentient robot to work in its factory and waxed on about full self-driving functionality, which is still undergoing beta tests. But analyst Tony Sacconaghi from Bernstein Research, who has an underperform rating for the stock, expressed doubt over Tesla's ability to reach 3 million in vehicle sales by 2024. If there is no $25,000 vehicle being worked on, is it really realistic to think that you can sell more than 3 million vehicles with two very high-volume cars and Cybertruck in 2024? He asked. Musk parried on a straight answer to that question and said that the full gravity of FSD capabilities, which he expects to bring in future profits, was not fully appreciated. Seth Goldstein, Morningstar analyst, maintained a price target of $700 for Tesla, stating that the company would witness near-term cost increases. Goldstein continued, "We see higher costs coming from higher raw materials and the startup of two new manufacturing plants, one in Austin, Texas, and the other in Berlin." 2. Alexander Potter of Piper Sandler said that the fourth quarter's results weren't completely flawless. As Potter wrote after the earnings call, supply chain headwinds are inflating logistics costs, while forcing a measured approach to new product introductions. However, he did not change his buy rating and price target of $1,300 for the stock. Noted Tesla bull Adam Jonas of Morgan Stanley had a more bullish take and called Tesla an EV cash machine. Tesla reported gross margins of 29%, the highest among car manufacturers. In its latest earnings call, the company is annualizing to greater than 1% yield. Sure, it's lower than the legacy auto companies that seem to be in fashion lately. But how many 50% multi-year top-line growers on your screen actually generate cash? Jonas wrote in a note. He also has a price target of $1,300 for the stock. 3. Another Tesla cheerleader, Wedbush Securities' Dan Ives, said that the quarter's results were stellar and discounted the fall in Tesla's share price as a knee-jerk reaction, as the decline in Tesla's share price began after its earnings call. Ives told Yahoo Finance, "We're only in the second inning of what's going to be a $5 trillion green tidal wave. The stock's selling off here. We just view it as an opportunity to own this more." 4. Wells Fargo analyst Colin Langan has a hold rating on Tesla stock and raised his price target to $910 from $860. He revised his estimate of his earnings to $7.85 per share from $6.90 per share after the earnings call. The record quarterly production and sales give Tesla a significant bottom-line leverage given the high fixed cost nature of auto manufacturing. He said, focal points for earnings include Tesla's 2022 guidance, timelines for production ramp-ups at new factories going up in Texas and Germany, especially in the face of semiconductor shortages and supply chain issues, and next steps in its long-term growth plan to increase annual production by a factor of 40 between 2020 and 2030. Nelson said, investors will be keen on hearing Tesla's 2022 guidance, even if the EV maker has chosen to provide scant specifics in its guidance. Even without that direct guidance, Emmanuel Rossner at Deutsche Bank is expecting a positive update from Tesla on growth in margins potential for 2022 and on cadence of new product and technology. Other potential highlights for the quarter include timing of the production ramp-up for Tesla's new factories in the Austin, Texas area and in Germany, and details about its alternative energy business, the status of its in-house battery production, and sales in China. With the two new factories coming online, Tesla should theoretically have enough capacity to exceed production estimates, Piper Sandler analyst Alexander Potter said in a recent note. But China's zero-COVID policy could threaten operations in Shanghai, so we're trying to keep a level head, he said. Analyst Matthew Portillo at Tudor Pickering and Holt said he'll be paying close attention to news around the Tesla Megapack, the large-scale storage system the company launched in 2019. Tesla's solar products remain challenged due to cost of installation, but Megapack continues to be a part of the portfolio that looks extremely interesting to us, with utility-scale batteries being paramount to build out of renewable capacity infrastructure globally, he said. Demand for the product remains very robust given the backlog of orders, with earliest deliveries stretches out for almost a year, he said. This is all for today, folks. If you enjoyed this video, then leave a like, and if you are new, then don't forget to subscribe. Stay tuned for the future updates. See you till the next video. Thank you for watching.